Hello friends, welcome to Letstute Accountancy. We have already seen the concept for not-for-profit organizations and their accounting. Now we will start with the problem solving based on that. So we are starting with question number 1. Let's see the question. From the following receipts and payment account of JM Club for the year ending 31st December 2019 and the adjustments given below, prepare income and expenditure account for the year ended 31st December 2019 and balance sheet as on that date. So they have given us receipt and payment account and adjustment. From this we need to prepare income and expenditure account, which is all similar to your P&L account, and we also need to prepare the balance sheet as on that date, that is 31st December 2019. So first we'll read this question. Receipts to balance on 1/1/2019, this is your opening balance. Donations, entrance fees, subscription, locker rent, income from annual program. Sale of furniture, book value is 20,000, which is sold for 15,000. Rent, stationery, wages, billiard table, electrical fittings, repairs, interest, investment, annual program expenses, match expenses by balance carried down. So this is the closing balance. Adjustments. Locker rent include 200 for 2018 and 50 is still outstanding for the current year. Rent amounting to 800 is still outstanding for the current year. 50% of donations and 50% of entrance fees are to be capitalized. Subscription include 1000 for the year 2018 and 500 outstanding for this year, while 200 received in advance for the year 2020. Opening stock of stationery stood at 500 on 1st January 2019, while at year end the stock was 1000. The assets on 1st January were furniture 25,000, sports material 5,000, while capital fund on 1st January stood at 54,700. So now the question has given us receipts and payment account and adjustment. Receipts and payment account is as good as the cash bank account. So this is your receipts, all the cash receipts, and these are all your cash payments. And from the adjustment. Now when we start preparing income and expenditure and balance sheet, first of all we will do the markings of this receipts and payment and adjustment, and then we will post the items in income and expenditure and balance sheet. So now starting with this, so either your items would be income, or it would be expenditure, or it would be assets or liabilities. Now also remember that if they don't give us the opening capital fund figure, and if it is not the first year of the business, how will you find out it is the first year or not? Over here they have given us opening balance. So since the opening balance is given, there must be some balances in the last year. So this is not the first year of the business. So if it is not the first year, we also require opening balance of capital fund, and if it is not given, you will have to prepare opening balance sheet. But over here in the last adjustment, they have given you capital fund on 1st January 2019 stood at 54,700. So this is our opening capital fund. So we are not required to prepare opening balance sheet. If opening capital fund is not given, then we will also have to prepare opening balance sheet, which we will see in the further sums. Now starting with this marking, to balance on 1st January 2019. Now this is the opening cash figure. Opening cash goes to opening balance sheet. Over here we are just preparing income and expenditure and balance sheet as on 31st December, that is closing balance sheet. So this will not go anywhere in our sum because this is just the opening balance. So this will not go, this will go to opening balance sheet assets. Now donations, if nothing specified, always treat your donation as income. So we can just write as I. Entrance fee, income, or it can be capitalized, but depending on the question. Now in the question they have given you adjustment regarding this, that we will see when we read the adjustments. Subscription, income, locker rent, income, income from annual program, that is also income. Now sale of furniture, the furniture which had a book value of 20,000, it is sold for 15,000. So 20,000 worth of furniture, if it is sold for 15,000, there is a profit or loss? There is a loss of 5,000. So how will you give effect for this? Now in this case, we give two effects. One, 20,000 worth of furniture which is sold, that we deduct from furniture on the asset side, and the 5,000 loss which we suffered, that is written on expenditure side. Okay, so we don't give directly effect for this 15,000. Now sometimes people might make mistake like writing this 15,000 on the income side. People, this 15,000 is received as cash receipt, but this is not your income. Over here you have actually sold your furniture, so your furniture should decrease, and on this sale we have suffered a loss of 5,000, that would be shown as expenditure. Now always remember, from the asset we always deduct the book value and not the selling price. Okay, so net actually we are giving the effect of 15,000, but into two bifurcation. 20,000 less from furniture on the asset side and 5,000 is your loss expenditure. Now coming on the payment side, rent is your expense, stationery expense, wages expense, billiard table that would be asset, electrical fittings that is also asset, repairs expenditure, interest expense since it is given on the payment side. If interest would have been given on the receipt side, that would become your income. Investment is your asset. Annual program expense, now we have two options. Either you write annual program expense on the expenditure side, but at the same time we also have annual program income, so we can also show net of figure like income minus expense if your income is more, or expense minus income if your expense is more. So either you show this income on the income side and expenditure on the expenditure side separately, or you show the net of figure. So over here I am going to show net of figure. We have earned an income of 1,500 and we have expended 1,100 for this annual program expenses. So income is more, so this we will show on the income side as deduction from income. So net annual program income would be 400. Next, match expenses expenditure and buy balance carried down. So this is our closing balance of cash bank. So closing cash bank goes to closing balance sheet asset, which we are going to prepare this balance sheet. Now starting with the adjustment, locker rent includes 200 for 2018 and 50 is still outstanding for the current year. Now while we'll solve this adjustment, we will give the effects, but right now we'll just discuss this. Locker rent includes 200 for 2018. Now we are in the year 2019. So 2018 is your previous year. In current year locker rent, that is in this 1000, this include 200 received for 2018, that is for the last year. Does that become income for the current year? No, it is just received in the current year, but that is your income for the previous year. So this 200 we will deduct from locker rent. So less from income or less from locker rent, because that is not your income for the current year. It is just received for the current year. So for example, if the salary for the March is due and if it is paid in April, what we say, if we are earning that salary, will we say that the salary is income for March or April? Yes, definitely March, because we have earned that is March, just received in April. Similarly, this locker rent pertaining to 2018 is income for 2018, just received in 2019, but that is not the income for the current year, so we will deduct from the current year's income. Now this second effect for this goes to, now this would have been outstanding for the last year, that is why it is received for the current year. So this would be your opening outstanding, which will go to opening balance sheet. Now what is opening outstanding? Outstanding for the last year, that is your last year's closing outstanding, that becomes opening outstanding for the current year. So opening outstanding goes to opening balance sheet, which is not required since opening capital fund is given. So just for the reference, I am writing over here, opening outstanding will go to balance sheet, opening balance sheet. Okay, and 50 is still outstanding for the current year. Now this is your outstanding income. Outstanding income, what we give the two effects of outstanding income. First, it is add to income, that is locker rent, and since it is receivable, so since it is receivable for the current year, this will go to closing balance sheet, closing outstanding. Closing outstanding will go to closing balance sheet, and over there, will this be your asset or liability? Definitely asset, since this is locker rent is your income, so this 50 is receivable. So this is your asset. Similarly, this opening outstanding, if we would have been preparing opening balance sheet, this will also go to opening balance sheet asset. Okay. Since there are two adjustments on locker rent, we can just put 2 star marks on that. Next, rent amounting to 800 is still outstanding for the current year. So that is your outstanding expense. Now this is similar to your normal final accounts adjustment. Outstanding rent, what we will say, add to rent, and since rent is your expense, payable, so this will become liability for the current year. So closing balance sheet, put a star mark on rent. This will ensure while posting the items of the receipts and payment, we will have idea, okay, these items have adjustments, so we'll leave the line accordingly. 50% of donations and 50% of entrance fees are to be capitalized. So out of this donations and entrance fees, 50% is to be capitalized. What do you mean by capitalized? Capitalized means that amount is to be added to capital fund. Balance 50% is to be treated as revenue, that is your income. So the two effects for this would be either what you can do, out of this 4,000, 2,000 donation you write on the income side, and 2,000 worth of donation directly write on the add to the capital fund, or else write 4,000 on the income side, deduct 50% to be capitalized 2,000, and then add those 2,000 to the capital fund. So we'll give effects accordingly, less from income and add to capital fund. So donations, entrance fees. Next, subscription include 1,000 for the year 2018, 500 for this year, and 200 received in advance for the year 2020. Now this entire is adjustment for your subscription. There are 3 items, so I'll put 3 star marks on that. Subscription include 1,000 for the year 2018. So now again this is your opening outstanding. Some amount of 2018, that is your previous year, is received in the current year, but that is an income for the last year. So that is not to be included in current year's income. So out of this 20,000, we will deduct this 1,000. This adjustment I am writing over here. For this 1,000, this 1,000 we will deduct from subscription, since that is not your income for the current year. So opening outstanding will deduct, and since this is last year's outstanding, so that is last year's closing outstanding, that becomes current year's opening outstanding. So this will go to opening balance sheet asset. Okay. Opening asset will not give effect because we are not preparing opening balance sheet. For this 500 is outstanding for the current year. So this is outstanding income for the current year, 500. What is the effect for outstanding income? So friends, this is similar to your locker rent itself. 200 for last year, 50 is for current year. Similarly, 1,000 for last year, 500 for current year. So add to subscription since it is receivable, and opening closing asset since this is for the year end, for the current year. So whatever is the outstanding for the current year, that gives you closing balance sheet, and whatever is the outstanding for the previous year, that would have been in the last year's balance sheet. Last year's closing balance sheet becomes current year's opening balance sheet. So this will go to closing asset because both these amount are receivable, while 200 is received in advance. So whatever 200 which you have received in advance for 2020, which is the current year 2019, but this 200 is received for next year, that is 2020. So does this income pertains to current year or next year? Yes, this income is for the next year. So this should not be included in current year's income. So this we will deduct from subscription. And since this is income received in advance, this becomes your liability. So it will go to closing balance sheet, liability. So guys, there are 3 adjustments. One is opening outstanding, other is closing outstanding, and third is closing advance. We can say this is a closing advance. At the year end, you have received some advance for the next year. What is your opening advance? For the current year, advance is received in the previous year. So that is advance for the last year becomes opening advance for the current year, and whatever you receive in the current year for the next year, that becomes your closing advance. So this 200 is your closing advance. should not be included in current year's income, so less from current year's income, and since it is received in advance, so that becomes a liability. Okay. Next, opening stock of stationery stood at 500 on 1st January, while at the year end stock was 1000. Now this is your closing stock and this is your opening stock. For opening stock, that is on 1st January 2019. Now when we utilize stationery, for example, you are running an organization and there are some stationery left from the last year. Last year you had purchased, say for example, stationery worth of 5000, but you have utilized only 4500. That means in the last year you must have booked expense of 4500 and 500 remains as stock that would have been carried forward in the current year. Now when you start using the stationery in the current year, this 500 worth of stationery which is carried forward from the last year, stock of stationery from the last year, that we will utilize first definitely. So this 500 would have been utilized in the current year, so this should be added to the current year's expense. That means ignoring closing stock right now, whatever you have made the payment for stationery 2500, so this is the paid in current year, purchased in current year, plus this 500 is paid in the previous year but must have been utilized in the current year. So that becomes your expense for the current year. You need to book the expense when you utilize the stationery, not when you purchase the stationery. Okay, so this is purchased in the current year, so in the current year it should be added. So add to current year stationery, and the second effect goes to opening balance sheet asset. Since this is your stock of stationery, so that is your asset, and it is on 1st January, so that is your opening asset. And there was also a stationery at the year end, that is 1000. Now this stationery must be out of this 2500 which is purchased in the current year but not yet utilized. Why it is not utilized? Because it is at the stock and the year end. So since it is not utilized, it should not be included in current year's expense. So this we will deduct from less from stationery, and since we have a stock left which can be utilized in the future years, so this would be your closing asset. Okay, so we can always remember like this, that we do in our normal final accounts. So opening stock, add purchases, less closing stock, that gives you stationery or any stamps or something utilized, and this utilized becomes your expenditure. So opening stock 500 plus purchase, that is your current year's payment 2500, minus closing stock 1000, that gives you expense for the current year. And opening and closing stock both will go on the asset side. Opening stock opening balance sheet assets, and closing stock closing balance sheet asset. Next, assets as on 1st January 2019. So they have given you brought forward figure. Since these are your assets on 1st January, so that will appear in the opening balance sheet asset side, and that would be carried forward in the current year. So this furniture will go to current year's asset, and also sports material will go to current year's assets, that is your closing balance sheet. And this is your opening capital fund will go to liability. Capital fund we write as the first item on the liability side. So guys, you understood this marking. In exam, it is always preferable first you do the markings of the question, do it with the pencil, and then you start with the posting. Now when you start with the posting, similar to final accounts, first give single effect for this receipts and payment account items. Why? Because one effect already appears in your receipts and payment, so other effect you have to give in your income and expenditure or balance sheet, and for all the adjustment you need to give two effects. Over here we are going to give only one effect for some adjustment, because second effect goes to opening balance sheet, which is not required to be prepared. So if you are preparing opening balance sheet, then second effect will go to opening balance sheet of the sum items. Okay, so we'll start with this. Question number 1. In the books of GM Club, income and expenditure account for the year ended, this is for the year, do give the headers properly and present your solution very neatly. Income and expenditure for the year ended 31st December 2019. Write the headers. Debit, credit, this is your account. Okay, though the name is income and expenditure, but this is your nominal account. And what is the rule, golden rule for nominal account? Debit all expenses and losses and credit all incomes and gains. So debit side it would be expenditure, just like your normal P&L account. Expenditure, amount, and income, amount. Okay. So on the debit side you write expenditure because debit all expenses and credit all incomes. So on the credit side it comes as income. Balance sheet as on 31st December 2019. This is like normal balance sheet. Liabilities, amount, assets, amount. Okay. So we'll start with receipts and payment account. To balance drop down, that won't come. Next, donations. So on the income side, by donations, since we have adjustment on that, in the inner column 4,000, leave one line or one or two lines. For one adjustment it is okay if you leave one line. Next, by entrance fees 4,500, again in the inner column. Next, subscription. So by subscription, in the inner column 20,000, we'll leave some space for that. You can leave 3 lines, or you have a bigger handwriting, you can leave 2 lines for each adjustment. By locker rent, we have 2 adjustment on that. So in the inner column 1,000. Income from annual program. So by annual program income, in the inner column, because we will deduct expense from the same, 1,500. Next, sale of furniture. So on the asset side, we will write as furniture. Now when we'll solve the adjustment, we'll write the opening figure, so that is okay. You just leave the space for the opening balance. Less sold. How much it is sold? So what I had already explained, you need to deduct book value from the furniture value. So book value of furniture sold is 20,000, which is sold for 15,000. So there is a loss of 5,000 which will go on the expenditure side. To loss on sale of furniture, that is 5,000. 20,000 minus 15,000. So we will not give any effect for this sale of furniture because that is just a cash received, against which furniture which is gone less from furniture, and profit or loss. If it was profit, write on the income side, and if it is your loss, write on the expenditure side. Next, rent. On the expense side, to rent, there is an adjustment 12,500. To stationery. On stationery also there were 2 adjustment, opening closing stock of stationery. To stationery 2,500. Next, wages. To wages, no adjustment in the outer column, directly 2,500. Billiard table and electrical fittings will come on the asset side. So billiard table 1,950 and electrical fittings 1,150. Repairs on the expense side, to repairs 1,000. Interest, to interest 1,800. Next, investment. So on the asset side, investment. Now since we had read the question, so we know there is no opening balance of investment, so directly you can write investment and outer column figure, or else what you can do, investment leaves the space blank for the opening balance, and the next line write as add purchase during your year or additions, and whatever is additions during the year write on that, and total on the outer side. But since we know there is no opening balance of investment, so directly I'll write in the outer column 12,000. Next, annual program expenses. So that we will deduct from annual program income less expenses. So annual program income is 1,500, expenses is 1,100. Totaling we will do lastly. Next, match expense. So to match expenses 2,500, and closing cash bank balance will come on the asset side. So this is your cash or bank, or you can just write bank balance or cash balance 30,000. So yes, we are done with receipts and payment account. That was quite simple. Starting with the adjustment. Locker rent include 200 for 2018. Now 200 for 2018, so that is the rent for the last year, not the income for the current year. So from locker rent deduct less opening outstanding 200, and second effect goes to opening balance sheet, which we are not preparing, and 50 is still outstanding for the current year. So add closing outstanding, or you can write as outstanding for 2018, outstanding for 2019, that is also okay. So add closing outstanding 50. Now closing adjustment goes to closing balance sheet. Rent is your income and income is receivable. Outstanding income is receivable, so that goes on the asset side. Locker rent outstanding 50. Next, so we are done with first adjustment. Rent amounting to 800 is still outstanding for the current year. So add to rent, add outstanding or outstanding for the current year also is okay. Outstanding rent 800, and second effect for this will go to outstanding expenditure is payable. So liability will leave some space for capital fund. So outstanding rent, that was 800. Next, 50% of donations and entrance fees to be capitalized. So less from donation and entrance fees, less capitalized. No, 4,000, 50% is 2,000, and 4,500, 50% is 2,250. This capitalized will go to add to capital fund. So over here we will have capital fund. In that we will have opening balance, add donations capitalized as 2,000, add entrance fees capitalized as 2250. Next, subscription include 1,000 for the year 2018. The income which is received for the last year, that is not your income for the current year. So this 20,000 include 1,000 for last year, deduct that, less. Next, 500 is outstanding for this year, so this is our closing outstanding. So we add closing outstanding. Now closing outstanding is 500 because that is your income for the current year, so that should be added to the current year's income, though it is not yet received. And 200 is received in advance for the year 2020. So this is received for the next year, which is included in this 20,000, but that is not income accrued in the current year. So this is your advance income, which should not be included in the current year's income. So that would be deducted, less closing advance. Why closing advance? Because it is received in the current year. So it is advance as on 31st December. So that is your closing advance. At the end of the year, that amount is your advance. So closing advance is 200. So that will give you subscription amount. Now we will give the second effect for these items. Opening outstanding will go to opening balance sheet. So not required over here. Closing outstanding. Now outstanding income is receivable or payable? Receivable. So that becomes your asset. Outstanding subscription. Outstanding subscription is 500. That is for the current year. And advance income, that becomes our liability. So that will come over here in the liability side. Advance subscription. We can write the year over here, 2020, and the amount of advance subscription is 200. So that is for your subscription. Next, opening stock of stationery and closing stock of stationery. So we add opening stock and we deduct closing stock. Add opening stock. Opening stock that would have been utilized in the current year, so add to expense. And closing stock is 1,000, so less closing stock 1,000, so that we deduct. Now opening stock will go to opening balance sheet asset and closing stock will go to closing asset. Stock of stationery 1,000. Next, the assets on 1st January 2019, furniture 25,000. So this furniture opening balance is 25,000. Sports material 5,000. We don't have any adjustment for sports material, so we'll write separately. Sports material, that is 5,000. And capital fund on 1st January, that is 54,700. So capital fund opening balance is 54,700. So we are done with all these adjustments over here. And now the next thing and the last thing remaining is the totaling. First of all, what you do, bring your inner column totals to outer column. So over here, 12,500 plus 800, that is your rent, 13,300, 2,500 plus 500 minus 1,000, 2,000. Avoid using the calculators if it is not allowed in your final exams. This is 2,000, 2250. This is 20,000 minus 1,000 plus 500 minus 200. So that is 19,300. Locker rent is 1000 minus 200 plus 50, 850. 1500 minus 1100, that is 400. Capital fund will do last because we add surplus or deficit over here. This is outer column, 25,000 minus 20,000. So what was this furniture adjustment? Out of 25,000, they have just sold furniture of 20,000. So we are still left with the furniture of 5,000. No adjustment is given for depreciation, and done. Now start totaling. How will you total? First of all, you will total your income and expenditure account just like your P&L account. And in your P&L account, what do you find? Net profit or net loss? Over here, since this is not a profit making concern, so we term this as surplus or deficit. If your income is more, that is your surplus, and if your expenditure is more, that is your deficit. So we'll start totaling our expenditure side because our expenditure seems to be more. 5,000 plus 13,300 plus 2,000 plus 2,500 plus 1,000 plus 1,800 plus 2,500. So that is 28,100 minus 2,000 minus 2,250 minus 19,300 minus 850 minus 400. So we are getting a deficit of 3,300. So 3,300 is your deficit. Means your expenditure is more. Total was 28,100 by excess of expenditure over income. By excess of expenditure over income. This is our deficit. So it is as good as our net loss, but this is not your loss because this is non-profit organization. And this deficit we deduct from capital fund less deficit 3,300. Total this up 54,700 plus 2,000 plus 2,250 minus 3,300. So that is 55,650 plus 800 plus 200. So that is 56,650. Asset side 5,000 plus 5,000 plus 1,950 plus 1,150 plus 12,000 plus 30 plus 50, 500, 1,000. So we get as 56,650. So our balance sheet tallies, that denotes it is quite possible our sum is correct. Over here our sum is definitely correct. Okay. So we are done with this question. What we have done? First read the question, mark the items, mark the adjustments, then start posting. While posting also, go in the sequence. Don't do like, okay, donation, then donations adjustment, or stay rent or rent adjustment, because sometimes it happens that you tend to forget some items or you tend to forget some adjustment. So it is always better go in sequence. First, we have posted all the items of receipts and payment. Wherever there was adjustment, we have left some lines for that. Then start with the adjustment, start giving tute effects. Over here, opening balance sheet is not prepared, so opening assets and liability effects are not given over here. Okay, so then we gave all the adjustment effects which I have marked in red, and then bring your inner column total to the outer column. Now sometimes it happens, then when people start giving the adjustment, they start totaling at that time only. Guys, don't do that time and do it at the last. There are two reasons. One, sometimes it happens that in the hurry of this totaling, you tend to forget the second effect. Sometimes it happens that at a later stage you realize that okay, there was some wrong adjustment, I need to correct it. Then you will have to change your totals also. So it is better first give effects of the adjustment, then start totaling, bring inner to outer column, total your income and expenditure, either it will have surplus or deficit, transfer that to capital fund, and then tell your balance sheet. So that's it for today. I hope you understood this sum and all the adjustments regarding this. So if you have any doubt or queries, do post in the comment section below. Thank you.